Discuss metals, man, the big sector which will now see some earnings coming out. Bhavesh Chauhan of Angel Broking and Tarang Bhanushali of IIFL now joins in. Tarang, let's start with you. First of all, what do you expect from Sterlite? We've already seen Hindustan Zinc's numbers. What kind of numbers do you expect from Sterlite, and what's the call on the stock?
We expect Sterlite to again report robust numbers. The zinc numbers are already out. This quarter's numbers would be aided by the zinc metal sales from the Anglo-American assets it had bought during the quarter. Also, copper margins would be higher as acid realizations have stabilized. And again, the aluminium business would do good with the aluminium prices remaining quite high, and it is among the lower cost producers if you look at on a overall basis compared to Vedanta Alumina. So we expect that yes, Sterlite numbers would be quite strong during the quarter. We have a buy rating on the stock. We believe that the company's earnings would be robust going ahead. First, we would see this quarter's performance would be repeated over the next 2 years. We believe zinc prices would be higher on a YOY basis for the next 2 to 3 years certainly, and with the volume growth coming from the already commissioned zinc smelter and the lead smelter which is expected to commission by Q1, followed by the large expansion in the silver refinery, I think this would boost earnings for Sterlite. Also, the Anglo-American zinc assets would completely reflect in the company's earnings in FY12 and FY13, and again this would contribute to around 16 to 17% of total EBITDA for Sterlite. So there is where the kicker would come into. The power subsidiary, one unit of 600 megawatts is already commissioned, and the second is expected to be commissioned in Q1 FY12. This would again boost earnings, and the rest too would come by end of FY12. So in all, I think the major triggers for the company would be good numbers from the zinc business and the commissioning of the power business from this year.
Gentlemen, morning to both of you. Bhavesh, let's get you in on this. You concur with this view, right, that Sterlite will deliver a strong set of numbers from here. Tarang really outlined all of the positives for us fundamentally, but what about the stock? I mean, the stock has underperformed quite a bit. You know, it had a few setbacks, etc. But the earnings growth has been quite intact for the stock. Currently trading at a significant discount to its intrinsic valuation. How would you approach the Sterlite stock from here, and what would your target price be?
I agree with Tarang. Basically, 80% of profits of Sterlite comes from zinc business, which is its subsidiary Hindustan Zinc, and with very robust results reported by Hindustan Zinc, we expect Sterlite results to be very good today. Close to 10% YOY growth in net profit is expected by us, and we do have a target of 212 on Sterlite.
Bhavesh, morning. Let's talk about Sesa Goa then. What kind of performance you expect from that, and what's the kind of price target you have?
Sesa, we are again very bullish purely because we expect iron ore prices to remain firm broadly over the next couple of years until the supply comes in. Additional global supplies we expect to come on stream from FY13 or even 14. So till then, the Chinese demand we expect to remain robust, and our target price for the stock is 382. We expect firm realizations for Sesa over the next couple of years.
Okay, let's move from non-ferrous to ferrous then. Tarang, good morning. What's your favorite pick in that pack, and how do you expect the earnings to pan out this time?
The top pick in the ferrous space is Tata Steel. We believe that the domestic operations is one of the best globally, not only in India. With margins above $450 per ton, we expect that the strong performance would continue going ahead. Also, the 3 million ton expansion is expected to be commissioned by the end of before end of FY12. So that would again boost earnings. And with if we look just if you operate at 75% utilization and with an EBITDA of almost $400, that would be a huge addition to the company's overall EBITDA going ahead. Also, the European operations, if you look at the cost efficiencies which the company has been able to maintain over the last few quarters would aid the company in maintaining an EBITDA per ton of around $40 to $50 in FY12 and FY13. So with stable earnings in Europe and strong earnings in India, the earnings look good. Also, the investment into Riversdale, the analyst community was not valuing it before the Rio Tinto acquisition. So again, now people would start valuing Riversdale also, and the New Millennium Canadian mine would start contributing from FY13. So with raw material integration rising in the European markets, as well as stable operations in Europe and a very good performance in India, we believe Tata Steel would outperform most of its peers going ahead. We have a target price of 745 on the stock.
Tarang, just go back on Sesa Goa, and Bhavesh was quite positive, but you don't share the bullishness. What's your target price on Sesa Goa?
See, Sesa Goa has outperformed. If Sesa Goa has run up in the last few sessions, the quarterly numbers announced by Vedanta, the parent arm, the production numbers were quite ahead of our estimate. We had expected sales of around 6.4 million, and the company has reported 7 million tons. Again, that was above our expectations, but we believe that realizations for the company would be subdued in this quarter. And going ahead, even though it manages to export, the cost involved in that is quite higher. The government has increased the export duty on iron ore to 20%. The iron ore freight on exports, iron ore is quite higher at 2,000 rupees. So the increase in margin, the company would not witness much increase in margin exporting the iron ore in the global market. So this would lead to some depressed realizations in the domestic market too. On their volume front, the Goa, the concerns over the mining bill in Goa is again a headwind for the company. If at all it comes into what it is planned, then again volume growth in Goa would be limited, and ramp up in Karnataka looks a bit difficult. We have seen the past performance. The company has a rated capacity of 6 million ton, but it has been operating at just 3 to 3.3 and a half. So again, reaching the 6 million ton would be difficult at that part. So the volume growth again would look is where the headwinds come into. So we expect raw material prices to decline in FY13. We expect prices to decline in the second half of FY12, and then again would be lower in FY13. So considering this all, we have a hold rating on the stock. We have a target price of 310 on the stock.
Okay, before we wind up, Bhavesh, just one quick question on JSW Steel. The stock has come off quite a bit from those 1370 levels that it used to enjoy. You have, I think, a positive call on this particular stock. What's the story there, very quickly?
Broadly, the call is on valuations. Valuation looks pretty reasonable, around 4 times FY13 EV EBITDA. Basically, it's play on volumes. We expect volumes of growth of at least 30% in the FY12, followed by again 18% volume growth in FY13. So that should increase their overall EBITDA. Stocks looks reasonably valued, and that's why we are positive on it.
Okay, thanks gentlemen for joining us and discussing the sector. That is the metal sector that we just spoke about. Two big earnings coming out today, Sterlite and Sesa Goa.